Suppose you're scrolling through quarterly earnings reports, as you do. Two companies both beat expectations by 5%. Same numbers, same industry, but one stock jumps twice as high as the other. What gives? In some cases, the difference might be that one of those companies has been quietly planting trees, cleaning rivers, and treating workers fairly for years. The other, maybe not so much. In the paper that I've linked to down below, researchers tracked over 90,000 earnings announcements across 20 years. The researchers wanted to know, does being a good corporate citizen change how investors react to your financial results? Because if it does, that's big news. After all, when a company announces strong earnings, investors face a choice. Do we trust these numbers? Is this sustainable? Are they cooking the books? These are all the sorts of questions that we might ask ourselves. And where we have uncertainty, that's going to make people hesitate. They underreact. The stock doesn't move as much as it should. And then over the next period, the price drifts upward as investors gradually believe what they initially doubted. The findings are, well, high CSR firms, so those with strong environmental and social and employee programs, showed something really neat. When they announced earnings surprises, the immediate market reaction was 100 basis points stronger than the low CSR companies. Even better, that post-announcement drift, that slow skeptical crawl upward, that shrank by 180 basis points. So, in other words, for the high CSR companies, investors didn't hesitate. They believed the numbers right away. For the lower CSR companies, those who maybe don't have the same kind of corporate social responsibility record, it didn't go so well. And so here's what nobody expected. Corporate social responsibility is not some feel-good side project that costs money and pleases activists. It's actually a kind of trust insurance. When you've spent years proving that you care about more than quarterly profits, investors are going to assume that you're not just playing games with numbers. So they process your earnings faster, more completely, more confidently. What we might extract by way of a moral is that good behaviour today buys you credibility tomorrow, and that might actually be when it really matters. So whether you're running a company or even just choosing where to invest, remember this, just like interest, trust compounds. The reputation you have is not just decoration. Firms that build social capital don't just sleep better at night, they absolutely get the benefit of the doubt when the numbers matters most. And in markets driven by information and uncertainty, that absolutely is worth real money.